I've reconnected the microphone again. Okay, that looks like I'm getting a much better response from the microphone. Better now, Luko. I hope you can hear me better now. Okay, so that part that I've already done, you'll be able to just follow on. Okay, perfect. I think it was the connection of my microphone cable that just wasn't 100%. You'll be able to follow that first section that I showed you now in the recording without me saying anything. It's basically just showing you what an answer book looks like that you students will get in an exam. Obviously not that identical one, because that was for some or other paper, but it gives you a very good idea of what to expect, which I just want to make sure that you guys aren't nervous about what you'll be getting, and you don't know what your answer books will look like. Okay, just give me 1 second. I just want to make sure. 6:30. Okay. Okay, so now I'm going to go back to the actual question paper itself, and let's have a look at a couple of the questions. And remember, whatever questions we don't go through this evening, I will record separately. So also remember, guys, when we go through these exam papers and discuss these questions, etc., in collabs, it's not about what the actual answer is. It's about looking at the types of questions that you can get and what your approach to the answer should be, and how you should go about answering the various questions, what your workings should look like, and the format that your answers should take in order to get the best possible marks. So in this question paper, question number 1 is for 20 marks. And there were, from here, 1.1 to 1.5, and these were all theory questions. In your answer booklet, provide the answers to the questions below. It was a friend, and she had questions regarding her bank statements and cash controls. So this is all to do with your Learning Unit 1 bank recons. Sorry, just grab the textbook so I've got the chapter headings. And this was mostly theory questions. So what is a bank recon? Why do receipts show up as a credit entry? Why would a direct deposit made by a debtor to a business not show up on the business bank statement? Explain the difference between a debit order and a stop order. And how would you correct a debit order for telephone charges that was treated as a receipt of money on the bank statement? So these are all questions that are going to put your knowledge to the test. So they're not just straight regurgitation and memorization of sentences out of the textbook. You have to show that you have understood what you have read in the textbook, and you can apply what you've read to an actual real life situation by explaining that. So what is a bank recon statement? And remember, clearly allow students to use your own words. You must use your own words. Obviously, it's an exam. You've got nothing to copy from anyway, so there's nothing to do with referencing. You just go ahead and write answers in your own words. You don't have to quote out of textbooks. The marks are going to be awarded based on the student's demonstration that they have understood the required. So in other words, that you've understood the theory that you've learned, not that just that you can repeat it. So the first question was, what is a bank recon? A bank recon statement is an internal document. In other words, it's the company's own document that they use the word hold, but remember, you can use your own language to record any outstanding or unresolved items that the bank has to correct. So take note, if there are 2 marks awarded to the question, you must make sure that in your answer, you have written enough to get 2 marks. So I would definitely award 1 mark to the fact that it is an internal document, and that it records items that must be corrected by the bank for the following month's bank statement. Then why do receipts show up as credit entries on our bank statement? So remember, the bank statement is what we get from our bank. They post it to us at the end of the month or email it to us. So when we've received cash, Why is it in the credit column on the bank statement, when in our books, our bank account and the bank column in our cash book receipts is a debit? So this is for 5 marks. So you have to give a really clear, concise, but complete explanation for 5 marks. So just have a look at this as an example. The bank statement is from the bank's perspective. In other words, it's recording what is in the bank's books, which is the mirror image or reversed from our perspective. It's the exact opposite. So therefore, money deposited by us is in effect owed to us by the bank. The bank owes us that money. So therefore, in the bank's books, we are a liability and we reflect as a creditor, and so on and so forth. So you can see you really have to give a complete explanation. So in this model answer here, there's probably more than 5 points. 1, 2, 3, 4, 5, 6, 7, 8, 9. There were 9 different points here. So as long as you have given us 5, you can get those 5 full marks. Then why would a direct deposit made by a debtor to a business, and for which a proof of payment was emailed on the 28th of the month by the debtor to us, not be visible on our bank statement that we received on the 30th of the month? What is the possible reason why? So for 3 marks. So in this case, again, if a deposit is paid to us, somebody has deposited that and say they deposit in a standard bank account and our bank account is First National Bank, it always takes a few days to clear from their bank to our bank, and therefore it won't show up immediately. Anything that shows that you understand that process. Explain the difference between a debit order and a stop order. All of this is in your textbook, so again for 5 marks. And how would you correct a debit order for telephone charges? So a debit order is supposed to come off your bank statement, but on your bank statement it was treated as a receipt of money. So the bank made an error. They put it in the credit column instead of the debit column. So how would you correct this error? So you would place the debit order amount on the bank recon statement. So remember, anytime the bank makes a mistake, we correct it we record that correction on the bank recon statement, and we are going to send a copy of that bank recon statement to the bank so that they're aware of these errors that they've made or the adjustments that we're waiting for them to make, etc. So always remember that when there's a correction to be done, that was done the incorrect way, the bank put it in the credit column, it should have gone in the debit column. So you first of all pass it as a negative amount, in other words, showing that it should have come off our bank balance to cancel the incorrect receipt. And then you have to show it as a negative amount again, which is then going to record the correct deduction that should have happened in the first place. And again, that one was for 5 marks. All right, so that's a very good example of a good 20-mark theory question and how they can ask you these types of things. So they don't necessarily have to give you a bank recon to complete or bank general ledger accounts to fill in. They can also do it, test you in this way. Okay, any questions on that? Any questions that you've got on that? Okay, remember, if you're listening to this as a recording and you've got any questions, please, guys, it's very important you always let me know the moment you've got a query, and send me a message or an email so that I can help you. Then question 2 was for 35 marks, and question 2 is from Learning Unit 2, which is the debtors and creditors reconciliation. So in this question here, they said September 2022 journal. So when they say the journals, they mean all of the journals in our business. So the cash book receipts, cash book payments, petty cash, debtors and creditors, journals and allowance journals. Okay, that's what they mean by that. Also, obviously, our general journal. These were some of the entries that appeared in those journals. In our debtors journal, the DJ, the total of the debtors control column was this amount. In the debtors allowances journal, the debtors control column total was 3,000. In our cash book receipts, the debtors control column was 25,000. In the general journal, there was a journal entry that we recorded for credit losses. Also in the general journal, we recorded interest that we had charged one of the debtors. Then in our cash book payments, we had to refund a debtor that had paid us too much money. And then this also would be recorded in the general journal. A creditor had a negative balance in our creditors account with them, and they also appear in our debtors ledger. So this is the case where there's a company that we are both selling to them and purchasing from them, the same company. That does quite often happen. Then also in the general journal, we granted settlement discount to somebody, and we received, this would have been recorded in the cash book receipts, 300 Rand that somebody paid us that we had previously already written off as an irrecoverable debt. Also a very nice question to test your understanding of all of the journals, the columns in the journal, and how the debtors control column work. So for 20, so this is a 35-mark question. For 24 marks, you had to complete the debtors control account in the general ledger. So remember, as soon as you see general ledger, you know that that is going to be your T account. So this is debtors control account in the general ledger for the month. So all of these items here that affect the debtors control, we have to show on the debtors control T account how that would have been reflected. Please always read all of the instructions, very, very important. We must balance the account. We must assume that the account had an opening balance of 5,000 Rand at the beginning of the month, and we can ignore the date columns. We don't have to fill those in. And also very important at the top here, always read all the information and pay attention to it. Assume that all amounts do include VAT where applicable, because we are now registered VAT vendors. So what would this answer have looked like? So take note, in the answer book, we've got our T account. They've got details folio amount on the debit side and details folio amount on the credit side. They want you to fill in that amount, the reference in the folio column, as well as the details column, in order to get all of the marks. If you read at the top here, it says in order to get the full mark for this details mark, the detail and the folio must be correct and be on the correct side of the ledger account. Okay, so the first thing over here was they said, always with a T account, the very first thing you're going to look for is, what is my opening balance? So assume an opening balance of 5,000 Rand. So you go to your T account, and the very first thing you're going to record is, it's a debtors control account. Debtors control accounts increase on the debit side because that's an asset account. Under details, we write the word balance. Under folio, brought down, and we start under the amount column with 5,000 Rand. That's our opening balance. Now we are going to record the column totals for the amounts that would have been posted from all of our subsidiary journals to the general ledger at the end of the month of September. So we go and start at the top. In the debtors journal, that column total was 57,000 Rand. So in the debtors journal, we record sales to our clients. If we have a sale to our client, that increases the amount that they owe us. So that will then go on the left-hand side, because that is going to increase the amount of debtors control. So remember, when it is the DJ, because it's coming out of the debtors control column, which is the main column of the debtors journal, under details we write sales and VAT, because this 57,000 is the total amount that we invoiced our customers, and the amount that we invoice them is the sales amount including the VAT, because they have to pay us the total amount including VAT. Then the next item said total of the debtors control column in the cash book receipts. So this 25,000 would have been the money that our customers paid us during the month in order to pay off the balance on their accounts. So when our customers pay us, that decreases the total amount owing to us. So we have to go and put that on the credit side of the account. So there's the 25,000 cash book receipts, and this would come from, in the cash book receipts, the contra account to debtors control would be bank. Okay, the main column in cash book receipts is bank. Then the next item over here is total credit entry for credit losses. So we wrote off to bad debts 450 Rand during the month, which means we reckon that we will not be able to recover that amount from our customers. So we are going to what we call write it off. So when we write it off, we take it away from our debtors control total. We credit the debtors control total in order to reduce it. So that's why it goes on the right-hand side. So we will be debiting the expense account called credit losses or bad debts, and we will be crediting debtors control with that 450. Then the next one is we charged interest of 90 Rand. So if we charge our customers interest, that means we are increasing the amount that they owe us. So that will go on the left-hand side to increase the debtors control balance. So we would be debiting debtors control and crediting the income account called interest received. So remember, what we write in the details column of any general ledger T account is the name of the general ledger account that is getting the opposite side of the entry. In other words, the other side of the double entry is going to go to which account. So if I am debiting debtors control with these amounts, I will be crediting sales and VAT, interest received, bank and creditors control. If I am crediting debtors control with these amounts, I will be debiting sales returns and VAT, bank credit losses, and sales and VAT. Okay, the name of the general ledger account that must get the other side of the double entry. So that was the 90 Rand, and then 800 Rand. We had to refund a debtor for an overpayment that was made in the cash book payments. So in our cash book payments, in the debtors control column, in our cash book receipts, in the debtors control column, so presumably included in this 25,000, one of the debtors paid us too much, 800 Rand too much, and we have to refund them. So if we are going to refund them, it means we have to physically pay them 800 Rand. So we are going to credit our bank account with 800 Rand and debit debtors control with 800 Rand, because over here in this entry, we would have credited debtors control with 800 Rand too much because that client overpaid us. So they overpaid us from a cash flow point of view. So we have to refund them that 800 Rand. You'll find examples of all of these different transactions in the examples and questions in your textbook. So I know there's a lot of questions in your textbook, but honestly, it is to your advantage to go through as many of those transactions in those examples and questions that you can possibly get through, because you don't know which of those transactions are going to come up in the exam, and you'll have to try and remember what it was. So the next one, it was a creditor, meaning somebody that we owe money to, negative balance of 3,000 Rand on his account, and we are going to transfer that account to his account in the debtors ledger. So over here, we are going to debit debtors control and credit creditors control. So we are transferring that debit balance in the creditors control, in the creditors ledger for that particular client. We're transferring it to the debtors control account. Settlement discount granted 700 Rand, so that is going to reduce the amount that the debtor owes us. So that must go on the right hand side to reduce the debtors control total. And also that will be sales and VAT, because that 700 settlement discount that we are granting them will be the sales amount including VAT. So we write here sales and VAT. And I think that was it. And then this last one here, cash received from a debtor that was previously written off as irrecoverable. When we wrote off that 300 Rand initially as a bad debt, we would have credited debtors control and debited the expense account bad debts. So that 300 Rand has already been taken out of debtors control. It is no longer there. So now when that customer at a later stage does pay us that 300 Rand, what will our journal entry be? We'll put it into our bank account because we received the cash. So we'll debit bank with 300 Rand, and we will credit an income account called bad debts recovered. So this last entry does not affect the debtors control account. So that was just a test to see that you know that that 300 Rand does not appear anywhere here on your debtors control. Where was that 3,000 Rand sales returns? Oh, right at the top here. Sorry, I just didn't highlight it. We did go through that. So guys, you can see this question by having a look at this question and how they've asked it. You really, really have to understand your debits and credits. You have to remember your, sorry, let's get this here. You have to remember your dead click rules, and you have to be able to identify that debtors control is an asset. So therefore, assets increase on the debit side, on the left-hand side. So then with each of these transactions, you have to decide, will this amount increase my debtors control balance or will it decrease my debtors control balance? And then correctly record it on the correct side of the account, also with the correct reference in the folio column and with the correct general ledger account name that would be taking the other side of the entry. It's a really good question. And take note, because it's 24 marks, that means you've only got 24 minutes to complete this question. It's a 180 mark paper, and you have got 180 minutes, i.e. 3 hours, to complete the paper, which means each 1 mark must take you no longer than 1 minute to complete while you are sitting there. And you have to track yourself and time yourself to make sure that you don't go over, because if you go over that time, you have immediately stolen minutes from other questions and you can't get those minutes back. So remember also what I always tell you guys is when you get your question paper and you are going through your question paper in your reading time, you're going to decide which question you're going to do first, which one second, which one third, which one fourth, and you're going to do them in the order that you know the best and that you can complete the quickest. So the shortest, quickest questions you're going to do first, and you're going to leave the longer, more difficult ones last, so that you've got all the time that you've saved up at the end to do those long questions. Because if you do those long questions in the beginning and you're slow and you've used up extra time, you'll never finish the paper. Very important strategy. So other questions list 5 ways we can ensure we get paid timeously by debtors. So that again, use your own intelligence and your own common sense, and you will find some of these things in the textbook as well. What are different ways that we can offer them discounts, etc., all different things. 5 different things for 5 marks. And then prepare a general journal entry. So when they say general journal entry, that is your general journal, which is your columns that you have got the details column, one details column with a debit and a credit column next to it. That's what a general journal is. So they say here, this for the 300 Rand received from the debtor that was previously written off as irrecoverable. So this is this last transaction over here. So hopefully when you did question 2.1, you realized that that was not affected debtors control and you didn't include it there. Now they've said, what is the general journal entry for that 300? So remember I gave you that journal entry a minute ago. What account am I going to debit and what account am I going to credit? So we are going to debit bank with 300 Rand because the customer has paid us 300 Rand cash. So increase bank account by 300 Rand. We then have to credit an income account because that 300 Rand is now going to go to other income. And that income account is called credit losses recovered. But because that 300 Rand includes VAT, we are only allowed to claim as our own income the excluding VAT amount of that 300 Rand. And the VAT then goes to, this is going to be a liability, so this would be basically output VAT, because we now owe that 39 Rand 13 back to the receiver of revenue. Because when we wrote the debt off, we claimed that 39 Rand 13 from the receiver of revenue as a VAT refund. Now the debtor has actually paid us, so we have to pay that 39 Rand 13 to the receiver. That's why it is a credit. This VAT account, so this account here, credit losses recovered, is an income account, and the VAT output account is a liability account. Okay? And the bank account is an asset account. So this categorization of the different account names, you have to know that in order to know whether to increase or decrease that account on the left hand or the right hand side. Do I debit that account or do I credit that account? Okay, so we know that income accounts are always credited when we've got income. We know that liability accounts are always credited when we owe money to somebody. And we know that assets are always debited when that asset gets bigger, increases in size. And then take note over here as well. Show your workings for this calculation of the VAT. So because the 300 Rand was including VAT, that means the 300 was our excluding VAT amount, the 100 parts excluding VAT, plus the 15 parts of VAT. So that 300 is 115 parts. And we want to know how much the VAT is. So we want 15 of the 115. So remember, any inclusive amount, any VAT inclusive amount, VAT inclusive amounts equal 115 parts, because they are made up of the 100 parts of the excluding VAT plus the 15 parts of the VAT. So this 260.87 is then the excluding VAT amount, which is the 100 parts, and the 39.13 is the VAT, which is the 15 parts, and the 300 is the 115. Always think of it in those terms, and then you will always get your fractions correct if you are trying to calculate VAT from an including VAT amount, or if they've given you the excluding VAT amount and you want to work out 15% of that amount. Practice with those calculations so that you get them right. You can also see that you would not have got all 6 marks for this 2.3 if you could not do your VAT calculations correctly, and also if you did not remember that that 300 Rand included VAT and that you had to split it between the excluding VAT and the VAT amount as well. So these questions incorporate everything that you know from all of your learning units, right from your accounting 5121. You have to remember everything, and it's a good idea to maybe flip through your accounting 1A textbook to remind yourself of all of those calculations and principles and double entries and T accounts and all those things as well before sitting down for this exam. Really, really, really highly recommend that. Any questions on that section? Anything that you want to ask me on that section? Nothing there. Okay, cool. So let's just have a look. Steve, I see you're online now too. I said to look at the beginning. I'm going through this as a 2022 exam paper that we're going through, and I'm just using it to demonstrate what they can ask you, how they can ask you, and how you should answer questions, and the types of things that you should revise for the exams. And I definitely won't finish going through the whole paper. So whatever questions I don't complete now in this session this evening, I will carry on and record for you later on in the week and then post that as well, so that you will have this entire full exam paper to go and listen to the recording of it. Okay, then question 3. Let me just see. Will I have time to finish this one? This is a 40-mark question. I have to finish in time because I have got another class at 6:30 with another group. So I don't want to start on a question that's going to be too long and then not be able to, but I think we should be able to finish this question. So question 3 for 40 marks. This is a question from Learning Unit 3, which is your depreciable assets, all your depreciation calculations. So your business owns currently 3 vehicles, each worth 220,000. So always take a highlighter with you to the exam so that as you are reading through the paper in the 15 minutes reading time, you are circling important things, you're underlining certain important things, and you are highlighting certain things so that when you come to do the question at the end of the reading time, you have already engaged with the paper and with the information on the paper, and you don't have to keep rereading and missing information. And I know this from my own experience, especially when you're in a hurry. You go back quickly and you're trying to find information, and because you're in a hurry, you keep reading past it all the time and you just don't see it. All of these vehicles were purchased on the 1st of January 21. Our year end is the 28th of February each year, and the vehicles are depreciated on the straight line basis at 20% per annum on cost. Then on the 1st of October 2022, one of the vehicles was taken by the owner for his own private use, and it was transferred to him at carrying value. So that vehicle is then no longer owned by the business, but it's now transferred out of the business's ownership to the ownership of the actual owner himself. So remember the proprietary accounts that we always use whenever there is a transaction between the business and the owner, and that is our capital account and our drawings account. So that's what you will use for this one. And then also on the 1st of October, the other two vehicles, so that's one of the three vehicles, the other two vehicles were sold for cash for 122,000 each. And then 1 month later, so that was on the 1st of October, so 1 month later is going to be the 1st of November. And make a note as you're reading this, jot these things down. You now buy 3 new vehicles for 350 each. So you see how I've underlined and circled and highlighted as I'm reading the question. This is what you must do when you are in the exam room. It helps you tremendously. So for 2 marks, explain how the carrying value of an asset is calculated. So that's just in words. So we'll go and have a look at that. That's easy enough. And then for 4 marks, also explain. So when they say explain, that must be in your own words. So explain in your own words what is the difference between depreciation and accumulated depreciation. So again, that's another theory question. And then the ones that require calculations determine the carrying value. So there we have to work out what the carrying value of that vehicle was that was taken by the owner when he took it for his own use. So let's go and have a look at that calculation. We paid 220 Rand for it, purchased it on the 1st of January 21, and on the 1st of October 22, the owner took it for his own use. So this is 3.3. So students can show workings in a different format, but you must show your workings. Cost price 220. So we have to work out what all the accumulated depreciation is from the time on the 1st of January when we purchased the vehicle up until the 1st of October, i.e. the 30th of September, when the owner took the vehicle. Our year end is the 28th of February. So the first year we owned it only for 2 months. So 220 times 20% times 2 over 12, that would have been the first year's depreciation. Then from March 21 to February 22, it is a full year's depreciation. So 220 times 20% is 44,000. And in this current year, which began on the 1st of March, up until the 30th of September, which is the date that we sold the vehicle, we owned it for 7 months in this current year before the owner purchased it. So we've got 3 lots of depreciation from 3 different financial years. So if you added those all together, or in this case, they've taken the original cost price of the vehicle and subtracted those 3 years worth of depreciation, and that gives us the carrying value. And take note how in the answer, in accounting, we describe what we are doing. We write down there cost price. We head these workings accumulated depreciation. We don't just take a piece of paper and spout numbers all over it so that nobody knows what the heck we've worked out. And then again, you've headed this carrying value is equal to cost minus all the accumulated depreciation, and that's how we worked out the carrying value. Then for 3.4, prepare all of the journal entries for the vehicle taken by the owner. So again, all the entries for that, what journal entries for that? So remember, your journal entries are details, debit, credit. This column is headed details. This is your debit column. This is your credit column in your general journal. So in this case, what we are going to record is the asset disposal journal entries. So we transfer the cost of the vehicle out of motor vehicles into asset disposal. So debit asset disposal and credit motor vehicles at cost with the cost price. Then we are going to record this current year's depreciation expense. So that is this current year's depreciation expense, the 7 months of this year. We would have debited depreciation and credited accumulated depreciation with the expense. And you have to do that journal entry first to work out all the accumulated depreciation up until the date that you've sold it. And then on the date that you've sold it, you transfer all the accumulated depreciation out of the accumulated depreciation account and into the asset disposal account. So because ACDEP has got a carrying credit value, we have to debit ACDEP in order to cancel that out and transfer it into the asset disposal. So that in that case, the asset disposal gets the credit. And that 77,000 are those 3 depreciation amounts added together, the total ACDEP on that vehicle from when you purchased it up until when you sold it. The one journal entry that they didn't include in here was whether we made a profit or loss on disposal. But in this case, we did not make a profit or a loss because we transferred the vehicle to the owner at the exact value of the carrying value. So in that case, there was no profit or loss because 220, here's our asset disposal account, 220 minus 77, which is all the ACDEP, gives us a carrying value of 143, and that's the total amount that we then transfer into the drawings account. So if we sold this vehicle for cash, we would have debited cash 143, credited asset disposal. If we sold this vehicle on credit to someone who was going to pay us later, we would have debited debtors control 143 and credited asset disposal. But in this case, it is the owner that took the vehicle, so we are debiting the owner's drawings account. In other words, we are charging the owner 143,000 and crediting asset disposal. Okay, and that one was for 10 marks, which means that you've got to take 10 minutes to write all of this down and to do all of your thinking and to remember the asset disposal journal entries, get the numbers and get the account names correct and your amounts correct as well. So that shows you have to work quickly, and it also shows you just how well you need to know your work, because if you don't know your work well, you will be slow and you won't finish that in 10 minutes. Then calculate the profit or loss made on the sale of the other 2 vehicles. So if you remember correctly, the owner took the 1 vehicle, and then also on the 1st of October, we sold the other 2 vehicles for 120,000 Rand each. So remember, we've already worked out that the carrying value of the vehicles is 143,000. Up to that date. What was that number? 3.5. Here we go. So the carrying value of the vehicles is 143, and we've got 2 of them, 286. The selling price is 120 times 2 vehicles is 240. So the carrying value was 286, but we only sold them for 240, so we've made a 46,000 Rand loss on the sale of those 2 vehicles. And then the last one, 3.6, calculate depreciation on the 3 new vehicles that were purchased on the 1st of November 2022. So what's the depreciation amount that we would then record, debit depreciation, credit ACBP, on the 28th of February 2023. So remember, we paid 350 Rand each for 3 vehicles. So 350 vehicles times 3, total amount times 20% on the straight line basis, and we only owned the vehicles for 4 months in this year, which is November, December, January, February, times 4 over 12. The total depreciation would be 70,000 for those 3 vehicles. Debit depreciation, credit ACBP vehicles for 70,000. And then 3.7, at what value will vehicles be shown at in our statement of financial position on the 28th of February? So what will the carrying value of our asset vehicles be at the end of the year? So total cost of 1050 minus total accumulated depreciation for the year, the carrying value of the vehicles will be 980,000. And then state whether vehicles is a non-current asset or a current asset and explain why for 2 marks. And that is then also a theory question. Explain why is again theory. So you can see these questions are a really nice mixture of calculations, theory, application of theory, journal entries, T accounts, calculations. You have to be on top of all of that information to get it right. Okay, guys, that is unfortunately as far as I can go for now. So that is that. Where did we get to? The end of question 4. So the rest of the paper I will carry on and record sometime this week, and I'll post that as well. There's some very good questions in this paper that will really be excellent revision for you for your exams. So please make sure to watch that as well in your exam prep. And then I will see you guys in your next collab, which we will call an NSS for exams, and we'll do similar type of work as we've done tonight in that NSS exam, NSS as well. Please let me know if there's anything specific that you want me to cover. Otherwise, I'll do something similar to what we've done tonight. Okay, so thanks guys for logging on, and thanks for your participation. And I will see you in the next collab. Bye guys. Sorry to be rushing off like this.